Welcome back. The world has been hit by more than 100 economic crises since the 1970s. But the scale and scope of the latest financial crisis has been far more damaging, as globalization has amplified the effects of American capitalism on rich and poor economies alike. America has found foreign fools, to quote you, Professor Stiglitz, willing to buy into its toxic debt and copy its model blindly, and as a result, see their wealth and chances for growth diminish substantially. Before I discuss the global impact of American brand capitalism and its future in the developing world with my guests, Ann Pettifor, Joseph Stiglitz, Ruth Lee, and Tariq Ali, Nicholas Hoke traces the effect of the Grameen Bank lending on one village in Bangladesh where its founder and Nobel Prize winner first started his microcredit empire.
3 months ago, Chubby Rani borrowed $500 to start her traveling yogurt stall.
Come and test it. It's good for kids.
The loan enabled her to set up her own business. Today, her yogurt trade is a hit. Chubby Rani earns $40 a month, twice the average salary in the country. 7 million Bangladeshi women have been provided with loans by Grameen Bank, a concept created 30 years ago by this man, Muhammad Yunus. Born in Bangladesh, Grameen Bank is today an empire with many tentacles and has even opened branches in poor neighborhoods in America. It has given more than $8 billion in microcredit loans to people in some 80,000 villages. But these borrowers seem far from happy.
That's harassment.
Kalihati is one of the first villages where Grameen Bank distributed loans. In the late 80s, Dr. Yunus gave $100 loans to 2,000 women, who used the money to invest in their farms. 25 years later, the majority of the villagers here are still living under the poverty line and are unable to pay off their loans. Saida is one of them.
Come with me. I'll show you. Things haven't yet improved. He's involved with Grameen. He's in debt. She's in debt.
Malika's paddy fields never produced enough rice, so she and her husband took one loan and then another, and there started the endless spiral into debt. 25 years on, she still hasn't managed to pay back her loan.
Okay, girls, here they come. They will keep taking and taking. There's no way of stopping them. They will take what they find.
This morning, her Grameen Bank manager is coming to settle the debt once and for all. The Grameen men have one goal in mind: get their money back, including the interest, no matter what.
What's all this? Hey, you owe me money. We have business with you.
I'm sorry, but my cousin has the cash. You know I don't have any money.
I just can't afford the interest. I'm so in debt.
You've got to give me my money back. They were due to give us the money, but they haven't paid. See, the problem we have with these people, it's been many years and yet no payments. We come every Friday or Saturday, but we haven't had any payment.
The very high interest rates that the Grameen Bank loans offer can reach 25%. The villagers here are just simply unable to pay back the interest rate, let alone the loan itself. Grameen Bank claims to have a consistent repayment rate of 98%. Khorshid Alam, an ex-Grameen Bank employee, helps to explain this.
Grameen Bank has made the poor people even more helpless. They keep giving loans on top of existing loans, and this is how they keep the loan alive. Lots of different threats are used when people cannot pay back their loan. For example, they tell women, sell your clothes, sell your jewelry, sell your children. You have to pay the loan as it cannot be written off. And that's how it is.
According to the Grameen Bank, 3 out of 4 borrowers get out of poverty. But we have found little evidence of this. One report stated that in Bangladesh, after 8 years of borrowing, 55% of Grameen households still couldn't meet basic nutritional needs and were under the poverty line. One recent report found that some borrowers never get off the debt treadmill, and another states that 30 years into the microfinance movement, there's little solid evidence that it improves the lives of its clients. Yet the Grameen Group is rapidly expanding, trading on the assumption that microfinance represents good-natured capitalism that benefits the poor. Its goal is to have 500 million new customers by 2020.
Professor Stiglitz, you're pretty robust when it comes to microcredit, and it does seem to be one of these tools used to globalize capitalism. But it has failed in so many parts of the world, and yet it's being celebrated.
Well, I think the film perhaps exaggerated the problems. There have been a lot of successes. If you look at the macroeconomic indicators in Bangladesh, they are much better in many ways, and the remarkable, given this failure of the state in Bangladesh. It has not, however, been, it's not the panacea, and it's not the basis of long-term economic growth, because it's really not, wasn't really designed to create new enterprises. It was designed...
Entrepreneurs. It was designed to create entrepreneurs.
No, it wasn't really designed. It was designed to help women go up one stage. They could get a little bit of money in order to raise chickens, to increase their incomes. The original intent was to help them not borrow just to enjoy consumption, but to make limited investments that would increase their standard of living.
But that does assume a certain market efficiency, that there's a system in place, that there's an infrastructure, but there isn't in a lot of these countries. But it assumes
fundamentally that actually if individuals pull up themselves up by their bootstraps, that actually they can emerge from poverty, where we know that poverty is actually structural. That actually there are deep structural forces which make women in Bangladesh poor, or in India and so on. I have been concerned about the rates of interest on microcredit for a very long time. I visited microcredit organizations in Orissa when interest rates there were 18%, and they don't use the annual percentage rate, they use the flat rate system, which actually means that the interest quite often doubles on these loans over the year as the capital is reduced. So they're very unfair. And when I complained about this to the bank, they said, but it's less than the private sector. And I think this touches on the real core of the crisis. So many economists blame this crisis on, you know, the low rate of interest in 2001, which in my view is a symptom, was a reaction to the crisis. In fact, interest rates have been higher than they've ever been in history. And that's what breaks the camel's back. That's what causes a company to go bankrupt, or a family to go down, or a woman when she loses her harvest or whatever to be able to default on her debts. And it's what also breaks the back, if you like, of governments who are borrowing on the international capital market.
Microcredit seems to me part of a general paternalistic, if you will, policy. It goes on with the World Bank and the IMF, through the various corporations, onto the so-called Washington Consensus, and so on and so forth. Have developing worlds been developing thanks to those measures and interventions?
No, except on some individual levels. I mean, I know of cases in Pakistan and Bangladesh and India where, if you're lucky, you found a very good organization and they help a tiny group of people. Beyond that, no, it's not at all systemic. It can't change the overall picture in a country. It can help bring electricity and water to a village where this didn't exist before, and that's a tiny, tiny step forward.
It makes a big difference for the lives of these particular communities.
It does, but not for the country as a whole.
Although, as I say, in the case of Bangladesh, you see some evidence of macroeconomic effects.
That's how capitalism works, and this is why I support the capitalist system. But what struck me, and I'm not an expert on these banks at all, is that, again, where is the government? Where is the regulation? Where is the political will to make sure that when people lend money to these people, these women for their chickens or whatever, that they know the implications of taking out a loan, they know that they'll have to pay it back, they'll know the rate of interest at which it will have to be paid. trade. Where is the regulation here? Because it
but
struck
the
me
point
that
is,
there was a...
Ruth, I really think this is unfair because on the politicians, because the economists have drained the politicians of those powers.
That is an absurd
they've
statement.
They've said that light touch regulation and non-regulation by governments is the best framework that you can conduct an economy with.
But the problem with globalizing capitalism is that it does create grey areas of enforcements, because it's not sovereign laws and it's not the global or the international law that regulates
It depends
these
what you mean
things.
by globalisation. If you're talking about the IMF or the World Bank coming in and saying, thou shalt do this if you want our advice or if you want our money, well, that's one set of rules about the globalisation. Or you have the WTO, of course, with trade rules, you know, that's another set of globalisation. But otherwise, it is up to the sovereign states to decide what they want to do. The sovereign state is still there. This is the thing.
But multinationals have now more power.
Well, politicians,
they can choose
sovereign states. Issue of microcredit.
No, and again, even with multinationals, you can decide whether you want Nestle in your country or not if you are a strong government.
The question is, why, for instance, take a huge country like India, where, you know, the economy has developed, there's no doubt about that. But at the same time, the politicians of the Congress or the right parties, and in some cases even the local communist politicians in some of the provinces, have simply caved in to the demands being placed on them, or the demands they imagine are being placed on them, or in some cases even want to be placed on them, not to do anything. You have in India a crazy situation where over the last 10 years, nearly 200,000 farmers have committed suicide because of what's been happening to farming in India, where they're being told to stop producing food crops, produce cash crops. Everything has become more difficult, and it's a horrendous picture, which could be changed if the politicians had some will.
In your book, Globalization and its Discontent in 2002, you definitely go on a crusade against the IMF and its policies.
That's right, but one of the things I point out in Free Fall is the fact that some governments resisted this. Canada and Australia had better banking regulation. China and India not only had better banking regulations, but also resisted the push for capital market.
But you're talking about strong states, Professor Stiglitz. What about the 80%? No. What? The other states, well, the Latin American, the African.
These are a very large fraction of the world's population. But even in India right now, there's a lot of pressure to keep the markets more open and not learn the lessons of the crisis. But I think this is where the crisis has made a very big difference, because people are looking around and saying which countries did better. And it's the countries that had good regulation that did not fully open themselves up. So I think this crisis has really changed the global dialogue. Even the IMF has changed some of the mantra that it's
now it's claiming to be a new, improved IMF.
And in many countries, it has actually changed its advice.
But Professor Stiglitz, and of course for all my guests, hasn't the paradigm, the economic paradigm, shifted already? I mean, isn't it too late in the game now to speak of the America brand capitalism anymore, whether through IMF or any other means? Aren't there now some countries in the world, some societies looking elsewhere for
very much so, but it is also the case, and I mean that's what I think is so interesting about this crisis, that you would have thought that there would be a broad consensus that that style of free market, unfettered free markets, would have said, we made a mistake, I'm sorry.
Fess up.
Yeah, that has not happened.
No. I think the real thing is that globalization as such has not been challenged. And globalization doesn't mean the IMF and the World Bank. It means the bond markets. It means institutions with global capital that flows unrestrained across the world, decides to threaten Greece one day, to short the euro the next, to threaten Britain. and say, we're not going to buy your government bonds if you increase your debt. That threatened President Lula before he was elected. Do you remember?
Yes.
They threatened Brazil and said, we'll bring down your government if you elect President Lula. Now, those bond markets are not, and those international capital markets are still as
but
they
now
were
President
before.
Lula is pretty obnoxious towards them.
Yes.
But I still want to put to you something of an interest for a lot of these countries outside Europe. The China example. The China example. Look, I mean, now American brand capitalism have produced probably 100 million new poor, while China has just pulled out of poverty 300 million, introduced 100 million Chinese to the middle class, and in the process has put more money in African infrastructure than the World Bank and the African Investment Bank combined.
Well, exactly.
Isn't that a model now, perhaps, for other countries of the world to follow?
Well, I would challenge that, because the reason they have is because the Americans overspent. Basically, the money that China has as savings is a result of on the first hand, of the creation of credit in the United States, and then of expenditure by the United States. So America has spent in China, asked China to produce most of her goods for her. China has therefore collected that income and now has savings. Now, if we want to use that as a model, that means we've got to have a country like the United States, which insists on living beyond its means.
I'm going to let Ruth answer you, but I will argue that this has been always the case between Western economies and the rest of the world anyway.
Yes. Well, I was going to say, I think that's conflating issues. I mean, what I was going to say about China is that it shows that at the end of the day, sovereign countries can decide how they're going to run their economy. The political leadership within those countries can decide what they do. So they have nationalised banks, they have state-owned banks, and they direct where those banks should actually lend the money. Now, that's perhaps not what you'd see in Britain or the United States of America, but that is what China wants to do.
Oh, Ruth, I want to give you an example of Sierra Leone, for example, we can escape the big state things. Sierra Leone has to fire 90% of its diamond workers. Do you think a government like Sierra Leone would have any choice in the global economy what to do?
Well, in that case, Sierra Leone can back out of the global economy. I know that sounds a rather absurd response to that, but again, it is a way forward. If you don't want to play by the rules of the globalisation, then you needn't do that. But I was going to say, back to China, I mean, you asked the question, is this a model for the rest of the world? No, because I think you have to rely that economies are based on culture, on political cultures and social cultures as well. And quite honestly, that for China to be transplanted into other parts of the world.
China is a state capitalism. Why wouldn't you want the politicians to play a role?
No, but it's private enterprise that actually makes the economy work. It just happens that it is obviously more directed.
State regulated.
It's more directed than a lot of other economies, and but it's been basically the private enterprise that has driven growth.
Interpreting the elements that made for success in China is very difficult, and I think you're absolutely right that you can't just transplant. I think there are some common elements. I mean, for instance, the importance of education, the importance of investments in technology, the importance of infrastructure. I think it's also important the efforts that they've made to reduce poverty. So there are a number of lessons, common elements, but the way these will play out in a small African country are going to be markedly different. Yeah. But again, I think the point that you made was absolutely right. There is a wide range of choices that governments have in the extent to which they buy into certain rules that have been advocated, like whether you have to liberalize your capital markets.
Precisely.
China decided not to do it. Yeah. India decided in between. Whether you have good financial market regulations. Canada, Spain had better banking regulations than the United States.
Did.
That's right. If it hadn't given the collapse of the housing market, it would be in terrible shape. So there are still lots of choices, even within the current global framework.
But we agree that there's nothing to be copied per se, but certainly there's something to be inspired by.
Well, I mean, basically, I think we would have to say that there's been a structural alteration in the world market over the last 25 years, and that is that China is now the workshop of the world, occupying a position roughly analogous to what Britain was in the 19th century. And the consequences of this have not yet worked themselves out through the system. And the Chinese state plays a very big role in this. I mean, the decision, for instance, to create 200 new cities in China over the next 50 years is an act of social planning, and that these cities will have 2 million citizens each, which means you have to build an infrastructure, you have to build an education system and a health system. So it is being planned from above. It is state capitalism. That is what it is. But so far, it's being effective. The downside is that it also has its rust belt and its sun belts. You have the unmaking of an old Chinese working class and the making of a new Chinese working class, which works in very different conditions from the old working class. How is that going to play out inside Chinese society? So there are lots of imponderables, but interesting ones.
Gentlemen, ladies, this was certainly an insightful discussion. And I'll be back with a final thought. I recently read that Somali pirates have set up a sort of a stock exchange for their lucrative business that has drawn financiers from the Somali diaspora and other nations. They started with 15 maritime companies, and now they are hosting 72. North of the capital, Mogadishu, Haradiri's stock exchange is open to all, making piracy a community activity. One piracy investor, Sarah Ibrahim, who contributed a rocket-propelled grenade from her ex-husband in alimony, has made $75,000 in only 38 days. Growing demand and mounting risks pushed ransoms from 2 million to 4 million to satisfy a rising number of shareholders. In the process, the pirate stock exchange has transformed this once small fishing village into a bustling town that earns percentage of every ransom to be used for public infrastructure, including hospital and public schools. So I ask you, what does it say about today's financial capitalism that Somali pirates are better at balancing greed and ethics than the world's emperors of finance? And that's the way it goes.